Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 4:30 in New York. It is Friday, happy Aloha Friday as we say on the islands. It is December 18th, 2015, and we're looking at the Dow Jones Industrial Average in trending markets. Bah humbug. There is absolutely no doubt, but yesterday's trade activity along with today's closing down in triple digits over 300 points each day for the last 2 days definitely takes into question whether or not we'll see any kind of a Christmas rally. We're certainly not getting it now, and in fact, traders are speaking, and what they're speaking is uncertainty rather than certainty with the rate hike and liftoff, which was enabled earlier this week. Take a look at our daily chart, and that's really an interesting factor when we consider Friday, Thursday, Wednesday, Tuesday, Monday. So Monday, we had traded to a low. Now, we've reached that low at this point, but roughly at 11,157. And then we had three pretty solid days as we went in Monday, Tuesday, and Wednesday to the FOMC meeting. This is our relief rally that we got once liftoff was announced. It took us to these highs at 1775. 17,750, those were to be extremely short-lived as we closed down dramatically yesterday and down even more today. Of course, we did take a stab at the market. We got in and stopped out in one day, and the loss itself was not something that I'm happy about, but we did curtail any kind of major loss in the market by putting a pretty tight stop in the market. But I honestly did not expect to see this kind of sell-off both today as well as yesterday. Now, in terms of how that has affected the S&Ps, we definitely need to take a couple of a good look at a couple of charts, this morning. But when we look at it first on a weekly basis, we get this long-legged doji with it closing near the bottom of the market. It can be called a Tombow doji or a gravestone doji, but if you look at where the high was, which is up around 2072, and the fact that we are now closed at 1992, breaking below 2000, you can see not only did we close down on the week, closing near the lows, but we really went back to and beyond what we saw on the prior week. In other words, what we were looking at on the prior week was this three-river evening star variation. And the reason I say it's a variation is simply put, you have double stars in the center. So it is a variation off of that. But we were really tracking higher for the better part of the week until yesterday. And yesterday, the trend absolutely turned, and it turned on a dime. Now, in terms of some of the things we want to look at, have we caused long-term damage in the charts? That's the first question we have to ask ourselves. And to do that, I want to pull up this daily chart. And on this daily chart, we can see without a question of a doubt, we've got a 38% retracement level. And that to me is a pretty critical level right at 2003 on the Standard & Poor's E-mini. We have absolutely just plummeted through that area. And as you can see, taken all of the fine work throughout the week has just been eroded in this 2-day period. Now, we haven't gotten to these lows at around call it 1083, 1084, which matches this low that we had here, which came in on Monday of this week. But we'll have to see what happens next Monday if we get a spillover and a carryover to actually come in and match these lows. This is where I'm going to look to see if we can find any kind of potential support. Now realize we broke hard through the 200-day, we broke hard through the 50-day moving average, and now through this Fibonacci level on a technical basis, we're now back in sell mode. And so any kind of a Christmas or New Year's rally, although could still actualize, because realize traders, this market turned on a dime on Thursday. We could certainly see a turn on a dime again, but in terms of how the technicals look at this point, they do appear as though we will see this equity market drift lower as we get closer to the Christmas holiday. And of course, between Christmas and New Year's, absolutely no doubt, but you're going to get extreme volatility because of the decreased volume coming into the market. Now, other markets that we want to just take a quick look at, dollar reversed and reversed hard. It's off over 0.5% on the day, 98.69. And then when we look at crude oil continues to fall, down almost 40 cents a barrel at 34.56. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for another Trending Markets. Bye-bye.